So very quickly, we're going to go over 3 real estate investment opportunities that we got just this week going on, right? And I'm going to talk about something that 99% of investors, especially retail real estate investors, don't get right. And this is very important. And this is first defining your parameters and then what's the angle, right? Because anyone can go and buy a flat or some residential real estate in any city. Most of them, unless you live in Singapore, unless it's Singapore or other very restricted markets, right? You can just buy it and then get normal average like returns or yield for that investment. Like anyone can do that. You don't need to hire someone else to do it or anything, but not everyone can get the angle, right? So in this video, we're going to talk about these 3 business opportunities and about the angle that I'm going to use to get more yield in each of them, right? And at the end of the video, I also want you to tell me which one is a better investment in your opinion, all right? So these are the 3 real estate investment opportunities that we got this week, right? So the first one is the auction. The auction is when the government takes the assets from someone because they cannot pay their debts or for whatever reason, or maybe they go through a bank or maybe they go through a notary, depending on the country you're in, and whatever. They steal the assets from someone who didn't pay their debts, they sell it, they auction it, and investors come and pay for it, and they use this money to repay the debts, like this property or this person or this company had, right? So in this country, flats are very scarce. I mean, land is also very scarce. We'll talk about this later, but flats are very, very scarce, and there's a lot of demand, right? So this year they're opening the auctions again, so you can just go there and get a good or get flats from -25 to -25, sometimes -30, like below market price, right? You can get it. The thing is, they come with a lot of legal issues that you need to fix, not before the asset is yours necessarily, but before you can get like average market returns for the investment that you're about to make, right? So you will not get cash flow, or at least like normal cash flow for the asset that you have until you fix those legal issues, and this could take anywhere from 12 to 18 months. So that's the first one. In my experience, I've done it a few times, this is what it takes, right? What's the deal size? Well, depends on the property that's being auctioned, but at least $500,000, right? So before you think about auctions, you need to know that you're not going to have any cash flow for at least a year, and that it takes at least $500,000, and then of course you need to win the auctions and fix all the legal issues, so you need lawyers and advisors and local people in place, like you need a whole infrastructure for that, right? And the level of involvement, depending on your setup, it's going to be either medium or high if you do it all yourself, right? Even if you don't do it yourself, that you hire people to do them, it will still be medium, right? What I have to do is fix all these legal issues, sometimes fix the flats, and then pay the debts that the property had with like the neighbors community or like the mayor, the town hall, right? Depending on where your tenant is from. Okay, so this was the first one, right? So the second one is a residential fund, a real estate residential fund, which is like, guys, where's the angle here? I talked about the angle on the first one. I'm going to talk about the angle on the second one. What's the angle here? These guys, like the funds that you should be investing in, have a lot of experience, aka track record, right? So you need to look at the managing company. You need to look at the general partner of the fund. So the angle here, what you're exposing yourself to, is the experience that this guy had getting good yield, good return, IRR. And it's going to run you anywhere from 2 years to 3 years, maybe sometimes 4 years, depending on the year fundraising that you're in. And they normally start at around 1 million, sometimes 2 million, but let's say it's above $500,000. And the level of investment is low. It's low, why? Because they do it. They're the guys who have the experience, right? So in this, depending on where they're investing, there could be another angle, which is my favorite mode for investment, which is a scarcity, right? For example, we are investing in one now that is developing residential real estate in Andorra and Ibiza in Spain, right? So Ibiza is an island, there's not a lot of land and everybody wants to be there, so there's a huge demand, but that's not enough. I don't only want huge demand, I want huge demand and a lot of regulation and a lot of restrictions on the available supply. So an island, that's like you get the land that you get, right? You cannot build anymore unless you're China or Asia or things like that, which then it gets different, but that's a different story. Okay, so this will run you 2, 3, 4 years, $500,000, and low level of investments because you're letting the pros do the job. Low level of investment, like of personal investment, is Very useful because most investors have other things to do or other jobs, or so that's why funds is in general a good investment in my opinion. So we have one, you have two, which are the funds, and the third investment opportunity that we have regarding real estate this week is land. Okay, as I said before, the country I'm in, the land is very scarce. The good thing about this land is that the government already approved the plan to urbanize, to make this an urban place because it's in the mountains, right? So it will be an urban place. They're already building the roads and all of that because the demand for this country is so big that people, like, they need places to live, right? The bad news is that the local government or your town hall or your council or your municipality or however you call it, depending on which country you're in, they haven't given out any construction licenses for the last 4 years. That means that you can buy the land, but you don't know where you will get your construction license, right? So this will take you anywhere from 48 to 60 months. Minimum deal size will be about 2 million. And the level of involvement, if you're deploying 2 million, I guess it's going to be high. And if you're deploying 2 million, but you don't want a high level of involvement, call me, let's do business together. Okay? So what's the angle here? The angle is the same one as it was before, is that the land is very scarce. Scarce, whatever. So there's not a lot of land and there's not a lot of buildable land in this country. So you can get a piece of that, even if you don't know how long it's going to take for you to get your construction permit. So once you buy the land, you need to scripture it, to sign it at the notary, and then you need to get an architect, make a project, present it to the local town hall, and they need to approve it, which could take 6, 12 months. And then you still need to build a house, right? Which could take 24 months, 18 to 24 months. That's a long time. Okay, so what's my point? My point is, these are 3 things you need to look at before starting wasting time, in Idealista or whatever is the platform that the real estate deals are in your country. But the most important point is actually illiquidity. Illiquidity. So let's answer the question from the beginning. Which one of them is the best investment? Write it in the comments. Okay, now I'll give you my answer. Any of them is a very good investment. Like, you could make a lot of money in any of them. Hell, you could make a lot of money in all of them if you had what? Well, first, enough capital, of course, but second, the ability to not take any cash flow from that capital for a long, long time. That's what we call the liquidity premium. Sometimes the bankers, they talk about this. Premium. So 99% of investors cannot take any liquidity premium. They cannot take advantage of the liquidity premium because they cannot take the liquidity because they need to be able to sell anything. That's what house flipping is. House flipping is giving liquidity to real estate, which is a very, very illiquid kind of asset, right? So before you start looking at real estate deals, think, can I take the liquidity and for how long? So I'll give you a few examples of people or institutions who can get a high liquidity premium. BlackRock, big institutional funds, family offices, other institutional investors like sovereign funds. What happened with those people? What happens with those people? What is the common denominator among all of them? They rule the world. They make more money investing than anyone else. Why? Because of the illiquidity premium. All right, so subscribe to the channel if you learned something, and I will see you in the next one. All right, so if you want to know more about this and you enjoy this content, join our private investors community. It's a Magister Investors Club. The link is in the description. There's a very short form, but fill it up, and I will see you on the other side. Bye.